Hello folks, this is why you must pay attention to the higher time frame draw on liquidity. Remember the last video that I showed you, the top-down analysis approach, and we were looking at price action reacting off the bullish breaker and trading into the next draw on liquidity, and I was looking at the buy side liquidity pool residing above that high and also the next high right here with a fair value gap right above it. But unfortunately, we see that the dollar is currently still bearish because it's seeking for the internal range liquidity residing below this level. You can see clearly there is a liquidity void right here, and I see the dollar really going to reprice the inefficiency right here. We may see the dollar trade into the discount fair value gap right here on the monthly time frame before it resumes that bullish price action and attacks the buy side liquidity pool right above the highs here. So this is what we're seeing currently. The dollar is still bearish and is showing willingness to trade into the fair value gaps right here, or the one at the deeper discount right here. We have about 2 points of interest, the one confluencing with the bullish breaker right here, or the other one right here. When you go to the weekly time frame, you would see again this week the bearish order block on the weekly time frame is supporting price to keep going lower. Remember, we see price after trading into the rejection block here created a bearish order block right here. The buy candle here that was traded through by 2 consecutive sell candles. Price action traded into the bearish order block and is currently selling. And of course, we have drawn liquidity residing below, which is actually that old low. You can see there's a fair value gap below that old low, and we did said a simple way for identifying drawn liquidity is to identify highs or lows with fair value gaps below or above them. So we would like to see price trade into the fair value right below that that old low right there, because that is the drawn liquidity on the weekly time frame. On the daily time frame, we were initially anticipating that the dollar would find support right at the bullish order block right there, and of course the mitigation block. However, we see the dollar violate all of that. All right, remember we said until we see a 1 hour shift of structure around this level, the dollar is not ready to buy. We would continue to sell until we see a 1 hour shift of structure. This is why it's important to always look for confirmatory signatures before you buy or sell any asset. And we're doing this on the dollar because the dollar, of course, is the benchmark asset for all the dollar and dollar associated currency. And until the dollar is ready, we're not ready to do anything just yet. Okay, so looking at this again on the daily, look at what happened. Price traded into the mitigation block right here. You can see that we had a failure swing right there and a shift of market structure bearish. Price action traded back into the bearish mitigation right here, took out the high, previous week's high, and traded into that bearish mitigation block. And we saw a 1 hour shift of structure after price had traded into that level. You can see the 1 hour created market structure shift. Okay, the 1 hour created a market structure. We saw price action created displacement lower right at this level. We see that displacement happen. If you remove the candle wick, you're going to see that this was actually a shift of market structure bearish. Do you see that? Remove the candle wicks and it's a clear market structure shift. This is why I constantly say anytime you're confused about identifying price action, make sure you remove the candles and you're going to see the real price delivery. The real narrative is without the candle wicks, just the candle body. Okay, so price action created that shift in market structure and traded back into the bearish order block right there. That was the sell on the dollar earlier this week, which was just yesterday, Monday. We started selling the dollar right there. And we were anticipating that should the dollar get into this level, that daily bullish order block and the mitigation block, we would like to see shift of structure first before we buy the dollar. However, as price traded into that level, what do we see? Again, we see price action created more entries, pairing up new sell positions at the fair value gap right there, the institutional order flow entry drill. Price action paired up new sell positions right there. And today during the London session, we saw price actually reacting off the bearish order block. You see that bearish order block right there. Price action traded into the bearish order block during the London. That is more sells for the dollar, and we are attacking the relative equal lows on the 1 hour time frame, because that is the draw on liquidity for the dollar. While we are selling the dollar, we are buying Euro USD, we're buying GBP USD, we're buying other foreign currency asset. Let's take a look at 15 minutes time frame if we see a more interesting price delivery. So this is the 15 minutes time frame, and this is what we see yesterday. Price action trading into that bearish order block on the 1 hour time frame. Of course, when you take a look at it on the 15 minutes time frame, this is where price action traded into and started to sell, created another shift of structure. You see that expansion, price action forming lower low, lower high. We continue to see that expansion again today during the London session. I'm going to show you how I would have traded this using the Asian session box. So look at what happened. Price action traded into the bearish order block on the 1 hour time frame that we outlined. If you take a look at it clearly, you would see that there's a fair value gap right at the bearish order block. So price traded into that level during the Asian session, but that's not the time for us to trade, because it's the Asian session. We would like to trade during the London session, which is the 2 a.m. New York Standard Time. And at the 2 a.m. New York Standard Time, you see clearly the dollar had traded into the bearish order block on the 15 minutes time frame, which is close to the high of the Asian session. And remember, how to trade the Asian session is simply looking for price action at the high or above the high of the Asia you sell. So look at what happened. Price actually created a shift of market structure bearish right here, and during the London open, we traded back into the bearish order block. That's a sell today, right at the Asian session high, and we sold the dollar. Okay, so we continue to sell the dollar. Right now, I see price action rebalancing that fair value gap, the sell side imbalance, buy side inefficiency. Price has traded into it, and you can see we have new sell positions right here. We like to sell again into the drawn liquidity, attack the drawn liquidity residing below. Let me know if you enjoyed this session. Make sure you subscribe to this channel. Don't forget to join the Telegram community for free signals. And if you like to join me on one-on-one mentorship, check the link on the description of the video for one-on-one mentorship. You would have access to my personal assistant, and they're going to sign you up on one-on-one mentorship. Until next time, I wish you good luck, good trading, stay safe.